Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenevec on Bloomberg Radio.
Lots of news in crypto today. Grayscale Investments filed publicly for an IPO. It's the latest crypto-linked company to test public markets under an administration more open to digital assets. For more on crypto and Bitcoin mining specifically, joining us now, a name familiar to our audience, Eric Trump is the co-founder and chief strategy officer of American Bitcoin. It's a publicly traded Bitcoin mining and treasury company. It's got a market cap around $4.4 billion. The company started trading on the NASDAQ back on September 3rd when it merged with a microcap. Shares hit a high on September 9th. They're down around 47% since then. Eric, of course, also the executive vice president of the Trump Organization. He joins us from Florida. Eric, good to have you on the program again. How are you?
Guys, great to be on.
So if somebody wants exposure to Bitcoin, why would they do that through American Bitcoin rather than just buying Bitcoin outright on an exchange or even through an ETF?
Yeah. Well, it's a great question. I mean, if you go out and you buy Bitcoin on an ETF or you buy it on an exchange, you kind of have one-to-one Bitcoin, right? You go out and you buy one Bitcoin, you're always going to have one Bitcoin. Our entire ethos is increasing Bitcoin per share. Right now, every day we're mining Bitcoin. We're mining Bitcoin at roughly 50% of spot prices of Bitcoin. So roughly about $56,000 per Bitcoin. That's what we're able to mine at. We're able to mine because we have the best facilities anywhere on Earth. We've got some of the cheapest energy anywhere on Earth. We do it in America. We do it in West Texas. So right now, our average cost to produce a Bitcoin is roughly $56,000, and we're mining Bitcoin 24 hours a day, 7 days a week. By doing that, you're able to increase Bitcoin per share, right? And that's the ultimate metric that we chase every single day. How do you increase the amount of Bitcoin you have per share you have of stock? And I think we can do that. Clearly, if you go buy on a one-to-one basis, you don't have that ability to do. And that's the one metric that we track every single day. And that's the one metric that we try and improve every single day. And we've done a hell of a job, guys. I mean, we this public was founded on March 31st. Roughly 5 months later, 5 months and 3 days to be exact, we were listed on the NASDAQ under ABTC. We're less than 3 months old, having been listed, and we're already well surpassed 4,000 Bitcoin that have either mined or that we've accumulated, making us the 25th largest BTC public treasury company in the world. And we're climbing that ladder very quickly every single day. So I couldn't be more proud of what we've been able to accomplish. And, everything that you just said, I think you mentioned a $4.5 billion market cap. And again, we've been listed for less than 3 months and growing by kind of with lightning speed. You mentioned the cheapest source of energy in mining that Bitcoin. Last time we spoke back in September, we had a discussion about wind energy that powers some of this mining. Is it still wind that's powering the mining operations for American Bitcoin? There's different sources, but certainly wind. There was a defunct wind farm. The guys over at Hut 8, which is our sister company, were able to lock into incredibly cheap energy because, frankly, it wasn't being utilized because it wasn't being pumped into the grid, and lock into a very cheap contract for a very long period of time. And so we've got unbelievable renewable energy that we're using to mine our Bitcoin. But you're going to see a lot of other energy sources come on. I mean, we're on the energy revolution in this country. I think you guys know that better than anybody. Look at oil, look at gas. The policies are working. Look at these SMRs. Look at kind of fusion reactions.
Well, wait a minute, Eric, because SMRs. I mean, we do know we're on it every day, and these small modular reactors, none of them are up and running. And anybody we talk to who understands the nuclear industry says that it'll take a few years to get them up and running.
Guys, absolutely. Don't think that I'm saying that they're up and running by any means. What I'm saying is we're in the heyday of power and power exploration in this country right now. You have an administration that's hell-bent on making sure, this country has incredibly cheap power. Guys, really interesting.
Let me just jump in there because we've done a deep analysis into the cost of electricity. In 2025, electricity costs depend far more on where you're located. And a lot of it has to do with the AI build out and the cost of those data centers and tapping into the networks. You talk about Texas. I'm curious what you're paying per megawatt an hour. In Houston right now, it's $25. It has gone up a lot since 2020. If you go back back to 2020, it was $17 per hour. I mean, those elections,
Carol?
I don't want to get political, but those elections, I mean, part of it was electricity prices that Americans have had enough.
Carol, you can't be serious. And honestly, I don't want to argue on Bloomberg. It's not what I came here to do. I've got plenty of things to do in my daily life. You had the last administration that had the greatest war on energy that we've ever seen in the country, right? You had an administration that was literally shutting down oil and gas exploration daily. They were shutting it down daily. They were cutting every pipeline. They were stopping every pipeline from being built. I mean, which ones do you want me to name? I could go through a list of 15 of them. In fact, it was Joe Biden's first executive order to shut down the Keystone pipeline. They shut down all permitting. They shut down all transmission of oil and gas. There was a war on energy in this country, the likes of which you've never seen before. We went from being energy independent under my father, where we're exporting energy to countries all around the world, to being energy dependent under Joe Biden. Don't even try and say, that we're not seeking the lowest cost energies. They had power plants that they were trying to build for a 15-year period of time, nuclear power plants. And guess what? At the end of them, Joe Biden's administration would turn them down and deny them the permits for nuclear energy, right? My father is hell-bent on making this country energy independent. The reason, hold on, please let me finish. The reason he's hell-bent on it is if you track GDP, any GDP growth around the world, and you directly correlate that with energy costs, they're 100% correlated. The lower your energy costs are for production of energy, the higher your GDP costs are. We have to win the war on cryptocurrency. We have to win the war on AI. We have to win these for our national security. We have to win these because we're the United States of America and we're the #1 superpower. We must lead the way.
Well,
we need energy generation. And my father is hell-bent of getting that through every single form, whether it's natural gas and we're drilling. Remember the slogan, drill, baby, drill. And we're drilling again and we're exploring again. And nuclear power plants are getting permits again, which was not happening. So please don't talk to me about affordability when you had an administration that did everything they could to crush energy prices for a 4-year period of time.
Erica, I respect your position and opinion on this, but I also will say that, the U.S. is the largest oil producer that's out there. I want to go back to your company because on mining, we learned today that Bitfarms, it's one of the largest cryptocurrency miners, said it plans to wind down those operations over the next 2 years, focus on providing infrastructure to generate power for artificial intelligence applications. We continue to see that. A growing list of Bitcoin miners are pivoting to AI and high performance compute services as profit margins shrink due in part to those falling prices of the tokens or the digital tokens that are out there. Do you have any plans for American Bitcoin to pivot away from Bitcoin mining into artificial intelligence?
No, the exact opposite. We're only going to ramp up. We're going to ramp up every single day. I mean, Carol, you mentioned falling prices. Let me just kind of hit on this one for you. Guess what Bitcoin prices were exactly 2 years ago from today? I'll tell you because you wouldn't know. 36,500 was the cost of a Bitcoin 2 years ago. We are up 180% in a 24-month period. The spot price of BTC is probably the #1 performing asset, of any asset. And this coming from a guy who believes in hard assets, right? I mean, I run one of the great real estate portfolios anywhere in the world. Cryptocurrency is absolutely on fire. Cryptocurrency is taking on the whole world.
Well, Bitcoin is up this year by about 5%. The S&P is up 15%. The NASDAQ 100 is up 20%. Gold is up close to 60% this year. No, I'm just saying.
Do you want to reverse? Hold on, Carol. Do you want to reverse that? I mean, do you want to go back 2 years? Do you want to go back 3 years? Do you want to go back 5 years? Do you want to go back 10 years?
I know how to dice and slice the market.
Have gone up on average of about 70% a year over year for the last 10-year period of time. All I'm saying is if you invested in BTC 2 years ago, is probably the best investment you could have made. If you invested in BTC 5 years ago, you're sitting on infinite amounts of money, right? BTC has been probably the highest performing asset of the last decade, right? And now also with BTC comes volatility. With crypto comes volatility. Volatility is our friend. Volatility is something that should be harnessed, right? And so I think Bitcoin is going to continue to massively overperform the markets. Of course, you're going to have drawdowns, right? I mean, every cycle has drawdowns. You were talking about NVIDIA, in the intro clip to introducing me today and how they're down 4%. And this is one of the largest companies on earth, if not the largest company on earth, right? I mean, that's down 4%. You're going to have drawdowns and things. That's life.
No,
but look at the historical performance of an asset, and nothing has compared to what Bitcoin has.
Totally understand markets, the ups and downs, and sometimes the downs are an indication of even it moving down further. Hey, one thing I want to ask you is, I think you were on with Bloomberg back in September. You owned about 7.5% of the company. Has that number changed? Because I can hear your conviction. It sounds like it's a long-term conviction when it comes to the digital world and Bitcoin in particular. So, are you buying more shares?
That number has not changed at all. I have every share that I started this company with, and I plan to for a long time to come. I love it. I believe in it. I think the people that we're doing it with are the smartest people in the world. We've got some of the greatest energy contracts. We've got the most sophisticated facilities. And guys, what I'll tell you is, I spend a lot of time all over the world. I think you know that from our real estate projects everywhere. Everybody wants cryptocurrency. Everybody believes in cryptocurrency. Everybody's tremendously worried about their respective governments. Everybody's tremendously worried about their respective financial systems, especially when you leave the United States. People in so many countries around the world, they get paid. They may as well burn that paycheck because of inflation. It absolutely kills them. All of a sudden, Bitcoin is digital gold. People believe in it. It's a great asset. It's an asset that can't be inflated. It's an asset that will only have 21 million coins ever. If the price of gold ever went to $40,000 an ounce, guys, I would tear down this building and I would find gold in the columns. I'd find gold in the concrete, right? You're gonna dig deeper and you're gonna go farther and you're gonna spend more money. So you're never gonna actually have capped supply. With Bitcoin, you have capped supply, and I can tell you, whether it's Asia, whether it's Middle East, whether it's South America, there is a longingness, to treasury Bitcoin, and you're seeing that from even some of the very biggest companies in the United States. They're putting it on their balance sheets in ways that they've never done before because they believe in digital assets and they believe in the attributes of them, right? And I'm a real estate guy. I love assets, but think about something that's transferable 24 hours a day, 7 days a week. Think about something that's global. Think about something that's easy to transport.
You do love assets, and you guys, your family is so entrenched, obviously, in real estate. You think Trump, you think real estate. But I'm just curious, if you had to choose between owning real estate or Bitcoin, what would it be?
Both.
No. You have to choose. You have to choose. Come on, Eric. You're smart. Come on.
I grew up when I was 11 years old on construction sites, right? I clearly love tangible assets, and I believe in them. And I think Bitcoin is the greatest hedge toward those tangible assets, that there is. What I will tell you is, in any place other than the United States, I would probably take cryptocurrency. I mean, imagine if you lived in one of various South American countries or one of various African kind of countries that have instability, where a government can come in at any time and steal your house, steal your piece of property, steal your hotel, right? You don't have a chance. You don't have that problem with Bitcoin. You don't have that problem with digital assets. That's literally qualified on ledger 24 hours a day. So there's a real need for this asset class around the world. And by the way, even in the United States, I mean, guys, I became one of the most debanked people, in American history for having never done anything wrong. Operating great golf courses, operating great residential buildings, condominium associations, hotels, right? And all of that got pulled out from under me because my father happened to wear a hat. I wasn't a politician. I've never been a politician. I've never worked for the government. For wearing a hat that said "Make America Great Again," all of a sudden I started getting canceled left and right. The interesting thing about crypto, technology, blockchain technology, digital assets, digital wallets, you can't cancel them. You can't take them away. Right. And that's a beautiful thing. And there's a flight to safety. There's a flight to safety that a lot of people in America have a harder time appreciating, albeit when people see what happened to us, they can appreciate more. But a lot of people around the world can really appreciate it. I think if you lived in a lot of the Asian countries, you'd appreciate it. I think if you lived in a lot of places in Sub-Saharan Africa, you'd probably appreciate that.
No, I understand what you're saying. And I think, we've been talking about cryptocurrencies for a long time here at Bloomberg, and I think time will tell whether or not this is something that becomes well entrenched within our financial system. Because at this point, people are still buying things like stocks and bonds in a big way.
Do you not believe it?
No, I do. But what I wanted to ask you is, and I think it's something that we talked about in our planning call. Do you feel like, Tim asked about, maybe the advantage of, buying into your company versus maybe a MicroStrategy or something else. Do you feel like you guys do have an advantage because of your proximity to the White House? And I ask this full disclosure. When we talk about Paramount Skydance, we say the same thing because we know that David Ellison certainly is looked upon favorably by the White House when it comes to maybe doing another acquisition. So do you think you have a little bit of an advantage?
Yeah, Carol, it's such a frustrating question. Now, my advantages, our advantage with American Bitcoin is we can mine Bitcoin at 50 cents on the dollar, roughly, and we're mining Bitcoin every single day. Any others? And by the way, Michael is a very close friend of mine, and there's no person in the world virtually that I respect more. He's an amazing human being, and an incredible visionary in everything he's accomplished. Our advantage to mining Bitcoin is every single day we mine a lot of Bitcoin, and we do so for 50 cents on the dollar. Go name another commodity you can do that with, right? Every other treasury company virtually out there, they have to go buy Bitcoin at the spot price of Bitcoin that day. I can effectively go out right now and mine Bitcoin at 50% of that number. I can also go out and I can acquire Bitcoin, and American Bitcoin can go out and acquire Bitcoin at spot prices. And guess what? As I do that, I can also yield manage down pricing, based on the Bitcoin that we mine each and every day. Obviously, the amount that you can mine is somewhat finite, even though our mining operations are growing on a daily basis. But that's a great advantage that I believe we have. We can increase the amount of Bitcoin per share of our shareholders. And we do. And that's why we're growing as quickly as we are. So I clearly believe in our strategy. I'm really, really proud that.
But you understand why you do understand why we ask it, right? I mean, full disclosure, like we try to be as transparent.
Carol, so many of the questions here have just been. I understand clearly where you stand, right? But it's no shock to me. I understand why you're asking the question. I also understand that I have absolutely nothing to do with the federal government. I want nothing to do with the federal government. I have no interaction with the federal government when it comes to crypto policy. I stay in my own damn lane, and my lane is operating the greatest hospitality company on earth, and operating a company that I truly believe in with every ounce of my heart and soul, which is what we're doing with Bitcoin, which again historically has been an incredible asset.
Hey, Eric.
So when I hear questions about how somebody could possibly argue that Biden had better energy policies for the United States than Donald Trump. Give me a break, right?
I didn't argue that. I just, we are a data-driven company, and so I look at data.
So give me the data. So perfect. Give me the data. Give me one quantifiable metric where Joe Biden was a better energy president than Donald Trump. You can't. Well, you just can't.
Well, I will say
when you had a president on the first day of his term cancel every pipeline, including the Keystone XL pipeline, which is why every gas pump in the United States of America had a little sticker on it saying, "I did that." And it was a picture of Joe Biden pointing to the price of gas. Please spare me this conversation. You've got some of the lowest gas prices in the history of our country. They're coming down every single day. You've got an administration that are putting through permits for nuclear reactors like their PEZ, because we need it if we're going to be successful based on all the metrics I gave you. No one can credibly tell me, as these guys build wind farms in the middle of nowhere that aren't even plugged into the grid. I say that with all due respect, Carol.
No, I know. And I don't want to argue. But there's a reason that, WTI crude is below $60 a barrel. And, the oil giants will talk and they'll say, listen, we're only going to drill.
What is that reason?
Or we're only going to do it. We're only going to do it if it makes sense. If the price of oil goes up, because there is, balance sheets, there's going to be a cost to drilling and doing exploration, and they're not going to do it unless the price of oil, whether the demand is there, and as there is more alt energy.
Price of oil, or do you think any of it has anything to do with the transportation of oil? Right? When you're shutting down pipelines every single day, you know what else is affecting price? The fact that you can't move something that's naturally heavy, right? And that's what Joe Biden was doing. It was the biggest war on oil and gas, all for the purpose of creating EV cars that the consumers around this country did not want to buy. How many billions of dollars did they spend building 4 charging stations in the middle of absolutely nowhere? Under Pete Buttigieg, our transportation secretary, who was completely incompetent.
All right. I don't want to get you political, but anyway, listen, in 5 years, what do you hope your company is? Just to wrap up, where do you see its role?
Yeah, I'm glad we came back to this. Thank you. I think we're going to create one of the great Bitcoin companies anywhere in America. We're ascending the ladder very quickly. I think I mentioned that we're under 3 months old, and we're a 25th largest public Bitcoin treasury company on all the lists, and we're ascending that list very quickly. We just passed Gemini, very good friends of ours, the Winklevosses, who they actually invested in American Bitcoin, and they're good friends of ours. And it seems like every day we're kind of climbing another step up that ladder. I think we're doing it well. I think we're doing it with tremendous heart and soul. I think we're doing it here in the United States of America. I think that's philanthropic to this country. We need to lead the world in the financial, digital financial revolution. Bitcoin is clearly leading that charge right now based on market cap. And I'm very, very proud of the company we're building and the speed of our growth. And I think we're going to do tremendously well.
I'm sure all the financial execs too, like this, probably played into it possibly, as well as regulatory stuff when they were there at the White House. It's all coming at us. Hey, Eric, thank you so much. Really appreciate it. We went around and around, and I'm glad we were able to cover a lot of ground. Eric Trump, co-founder, chief strategy officer of American Bitcoin and executive vice president of the Trump Organization, joining us there in Florida.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
As you know, we've got a sell-off on Wall Street. Traders bracing for a wave of economic releases after the U.S. government shutdown ended. It has driven, though, stocks and bonds lower on concern on whether the data that we ultimately get from the U.S. government as they play catch-up and then start to get back on schedule, whether or not it clears the way for another cut by the U.S. central bank. It's kind of in question right now.
Another thing in question is just what this economy looks like. So we're hearing from different companies and we're hearing different things. The latest, Verizon, discussing plans to announce job cuts across the company next week. This, according to people familiar with the plans. The move, a major step in a transformation led by new CEO Dan Schulman. Nonetheless, Carol, it's another example of another big company cutting some jobs.
Yeah, exactly. And then you do have Fed speakers out there. Federal Reserve Bank of San Francisco President Mary Daly said it's too soon to decide whether policymakers should lower interest rates in December. Here's where we are. Let's see what Elizabeth Renter has to say. She's senior economist over at NerdWallet. She's with us from Durham, North Carolina. Hey, Elizabeth, good to be talking with you once again. So what conviction, first of all, do you have in making calls on the U.S. economy, on the U.S. labor market, on inflation?
Hey, well, thanks for having me again. You know, it's tough to make sense of what's going on in the economy right now because the access to data is so limited. We're looking at private data sources and trying to infer what the BLS would have said over the past several weeks. And that's difficult. That's not to say it's brand new, right? Myself and the Fed and economists across the country have been looking at private data sources in addition to federal data sources for some time. We're just having to put more weight on them now than we would have. I do think that
Elizabeth, just want to jump in. What private data sources are the ones to you that are most important? What do you think tells the fullest story?
Yeah, well, I think when it comes to the labor market, there's several great private data sources. So the ADP is a reliable data source, but all of these private data sources have unique caveats. They're measuring slightly different things, and you need to take that into consideration. So ADP misses government jobs entirely. They're more likely to overstate the number of jobs being added to the economy right now because they're not catching federal jobs, for example, which we know is a big item this year entirely in 2025. Then you have a source like Revelio Labs. They're another solid source of labor market data, but they're searching job profiles, professional profiles. So there may be a delay in their data because they're catching, if you're open to work on LinkedIn, for example. Putting all of these together takes a little more work than just looking at the jobs report every month. But I think that's what we have to do in the current environment.
All right. So labor market, just quickly, how do you see it?
Solid, but gradually cooling, which is, I think, in alignment with what Fed Chair Powell said just a couple of weeks ago. You know, there is some weakness. Hiring is slow, but the unemployment rate, according to the Cleveland or the Chicago Fed nowcast, remains in that 4.5% range. So not alarming. We are hearing a lot about layoffs in the headlines, but the headlines and what happens in practice or what would have been reflected in the BLS data are two different things.
All right. Inflation. So I want to just point out in an interview with MarketWatch published today, Cleveland Fed President Beth Hammack said she's worried market participants might doubt the Fed's commitment to its 2% inflation target if the central bank continues to lower rates. 2%. That target, and then where we are in terms of U.S. inflation, how sticky it is as we get kind of closer to 2%, but not quite there.
Well, I think we can still confidently say that inflation is high. It's above target, but it's not accelerating rapidly. So another source I look to for this one is the Cleveland Fed nowcast. They compiled data from commodity prices and other high frequency sources to estimate where the CPI would be. And it says that, just that inflation is steadily high, but not accelerating. Right now, I think expectations are in alignment, whether you're asking the Fed or asking consumers. Up in the short term is what people anticipate, right? Yeah. Inflation is going to remain above that target, but then come down in the long term.
Can I just ask you, I understand that prices are not going up like they were a year and a half, 2 years ago. I get that, but they're also not going down. And I mean, the reality of kind of what we're all paying for things, is this just it? And that's just the way it is? And why does it feel like we are still paying a lot for stuff? And is that a new reality that things are just costing more in today's society?
Well, I think there's several reasons for that. Right now, this year, there are several sources of inflationary pressure, and we're seeing that, or we have seen that up until this point in the inflation data. The impact of tariffs has kind of been trickling in, but also demand for services has kept services inflation high. I think also it's because we're all hyper attuned to it. There's research out there that says after a period of high inflation, we're all going to be extra sensitive to inflation. And I think that also plays a role. We all have our eyes out for it, right? So because inflation is higher than we like, it's going to be particularly painful in light of the recent high inflation period.
Elizabeth, I had an interesting conversation with somebody today about the Federal Reserve and just the idea of Fed independence. And I'm curious about your view on this. Her argument to me was, we're starting to look at monetary policy in the United States that represents not necessarily monetary policy historically in the U.S., but one that's under more political pressure than we've seen, at least in recent years. And to her, it's starting to look like something more out of the developing world where monetary policy is more politically influenced. I'm wondering your view on that.
I don't know if I would take that quite of a bleak look. I mean, I believe the risk is there. I think it was just earlier this week where Bostic came out and said he plans on retiring next year, which opens up another seat on the Fed. And the risk is always there that as an administration has undue influence on who takes a seat at those decision-making tables, there could be more pressure than usual. I do have pretty deep faith in the independence of the Fed and sort of the dedication to independent monetary policy that these people have in these positions. But I do think we have higher risks now than we did, say, a couple years ago.
Yeah, I mean, part of, I think, confusion on maybe the part of investors when they're thinking about the data that's going to come and whether or not it provides conviction for another rate cut come December. The part of it is, I mean, Fed officials themselves are divided, right, on the best path ahead for interest rates due to high inflation and continued weakness in the labor market. So it's a dual mandate. That's tough when both parts of the mandate are tricky right now, right? And maybe create some problems or would determine a different Fed policy for each. And you do wonder that debate and which voices are going to sound the loudest and perhaps have more sway, assuming Fed Chair Jay Powell is among them. But how we need to think about that in the next Fed decision.
Yeah, you're absolutely right. So not only is the data pointing to the dual mandate, sort of the two sides of the dual mandate being at odds, right? We still have high inflation and the labor market is cooling, but neither one of those things are sort of at a tipping point, right? We're not seeing a skyrocketing unemployment rate, and inflation is not at target, but it's not alarmingly high. So it makes sense that there's sort of more gray area and people are going to fall on either side of these decisions a little bit more than they normally would.
What?
I think we got to go.
I think we do. Listen, there's a lot going on. And I guess as the data comes in, we'll ultimately see. It is certainly an interesting time to be talking about the U.S. economy. That is for sure. Hey, Elizabeth, thank you so much. Elizabeth Rentor, she's senior economist at NerdWallet, joining us from Durham, North Carolina.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We got another stock on our radar.
Yeah, another stock that's moving lower. In fact, shares of Disney down about 8%. shows that it's not so magical, at least today, in the Magic Kingdom. Shares of the Walt Disney Company, rather, down the most since April. This is the company reported sales that fell short of Wall Street estimates and set a slate of big budget films, including the new Avatar picture, Carol, are going to weigh on results for the first quarter of its new fiscal year.
Yeah, it's definitely played out in today's session. Hey, Disney CFO, Chief Financial Officer Hugh Johnston, joined Bloomberg Television earlier today, covered a variety of topics, including a succession plan for the current CEO, Bob Iger.
What the board has indicated is that will take place sometime during the first calendar quarter of 26. We report in next February. Whether that'll be before or after will be up to the board, but we should have it done by the end of March.
All right, that again is Disney CFO Hugh Johnston. As he said, Disney expects to name a successor to Bob Iger by the end of March. Keep in mind, Iger was there for a long time.
One named Bob or not one named Bob?
That's a good point. Oh, that's right.
That's my question. But it was Bob followed by Bob followed by Bob.
But okay, Bob Iger there for a long time, considered kind of a mastermind in terms of CEOs and what he did with Disney. Then Bob Chapek came in, and there was a lot of focus, right, on streaming, and then things didn't go
Just
so
reminding
well.
everybody about the succession last time
and
around.
Bob Iger came back.
Exactly, okay.
So we'll see whether or not they have to be named Bob. Let's see what our Geeta Ranganathan has to say. She's Bloomberg Intelligence Senior Media Analyst. She's at BI headquarters in Princeton. We're going to talk succession in a moment, whether or not the next CEO, Geeta, has to be named Bob. But more importantly, let's talk about the quarter that was and the outlook that is. What do we need to know about earnings?
Yeah, quarter that was fine. It was pretty much in line with expectations, Carol. I think what really has kind of spooked the street a little bit is guidance. Again, overall guidance for fiscal 2026 seems to be okay. I think really what investors are having a hard time kind of wrapping their heads around is the fact that, fiscal 1Q looks really soft, which means everything is going to get pushed to the back half of fiscal 2026. And I think that's what's causing a lot of the nervousness that we're seeing today.
I want to go right to the successor. Disney board will name a successor to CEO Bob Iger.
Does it have to be named Bob?
Yeah, I mean, well, who's on the short list right now?
Yeah. So, I mean, the first big question, Tim, was, is this going to be an external candidate? Is there going to be an internal candidate? So it looks like initially when they started out, it was all 4 internal unit heads that were in the race. So we're talking ESPN's Jimmy Pitaro, we're talking Josh D'Amaro of the parks, Dana Walden, and Alan Bergman from the studio and content division. It looks like that race has kind of now narrowed down to 2 potential candidates. So we're looking at Dana Walden, who is a creative genius. And of course, you have Josh D'Amaro, who's headed parks and is a parks veteran, has an absolutely stellar track record there. So it's kind of going to come down to this eternal question, right? For Disney, the content is the start of everything. It is the source of everything, including, parks, right? The IP of parks is all from the movies and all the other creatives that they have going on at film and TV. So again, which one is more important? The last time they had a parks guide, that didn't go so well. So we'll have to wait and watch.
Yeah, and right, they used to do things. I remember reporting on Disney, and people would switch jobs, right? The CFO with parks, I think, or something, as they would kind of like a CEO race, if you will, and let people kind of get another view of the company. Looking at Dana Walden, co-chairman, Disney Entertainment, does have a big portfolio.
Jimmy Kimmel, when he spoke to Lucas Shaw earlier this year at Bloomberg Screen Time, Jimmy Kimmel, that is, incredibly complimentary of Dana Walden. Her name came up so much during that interview. Yeah,
that's a really good point. I didn't realize so she's done a lot of interesting things. Handmaid's Tale, Kardashians, Only Murders in the Building. So what does Disney need in your view? You understand this space and kind of how media has continued to evolve and Disney's place within it. And Disney's not just media, but they are media content and kind of just putting it across their platforms. What kind of CEO does Disney need?
They need somebody who can do everything, right? Exactly as what Bob Iger has done. I mean, so these are some really big shoes to fill. I just wonder with kind of, obviously Dana Walden, really good at handling talent. You just brought up the Jimmy Kimmel controversy. I mean, you need to be able to have a lot of charisma. You need to be able to kind of work with a lot of these very, very hard personalities in Hollywood. So I think Dana Walden definitely knows her way around there. She obviously has a great reputation, a great track track record. But at the same time, when you kind of look at the bread and butter of the business, that is the parks business. And you have to kind of be an operations geek and an operations nerd to really get the day-to-day running at all of the parks, at all of the cruise ships, the vacations properties. And of course, Josh tomorrow is the absolute superstar there. So I really wonder whether they actually need to have kind of a co-CEO structure. I mean, we know Netflix has done that pretty successfully. Spotify is looking to do that starting in January. So, I think it could work, but then again, it's also a recipe for disaster sometimes.
Hey, I love that. Maybe, who knows? Maybe we'll find out just in a few months. Before we let you go, in an environment where so many of these large media companies are shedding assets or combining to form new ones or looking to buy more, Disney's assets, is it the right size right now? Does it need to shed any?
I don't think they need to shed anything. If at all something comes up, it's pretty much just the linear TV networks. But that is a smaller and smaller part of the business. As we kind of look at the portfolio, Tim, you just look at the theme parks business along with all of the cruises, and then you put streaming together. Just those two pieces of the business would be close to about 70 to 75% of earnings in fiscal 2026. So really, those are the big drivers in terms of earnings. I don't really think they need to shed anything. But of course, the question is going to keep coming up whether they do need to kind of spin off their cable TV networks.
I love it that it's though it comes down to parks, being so important to the company. Hey, Geeta, thank you. Geeta Ranganathan, she's Senior Media Analyst at Bloomberg Intelligence.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.